Well, hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. What I'm trying to do here is get you what you need to know before you go, and that's going to start out with talking about some economic data, look at the overall market, see how the economic data, geopolitical environments impacting those markets, and then ultimately we'll talk about directional assumptions and option strategies that we could look at to go with those assumptions there. And these webinars I do on Fridays, folks, or sorry, Thursdays. On Thursdays, I do these webinars where I'm going to really drill down on a different option component. Right now, we're doing cracking the codes to trading options. So please check that out and hit the subscribe button, because sometimes I come in unannounced and there's a little bell right next to that. We'll give you a notification. The bell will tell you when I come in unannounced, folks. And smash the like button for me before you go. Thanks. All right, let's talk about the economic data, geopolitical environment, what's happening overall here. Right now, we've got crude oil inventories. We saw a major drawdown of almost 5 million barrels yesterday. On the economic data point there, we were expecting a build of 2.5 million. Well, we got a drawdown of 2.5 million. So a $5 million miss on that headline number. That should give crude oil a little bit of upside here. We've also been seeing those economic data points, ISM, Institute for Supply Management. Remember, why is that one important? It's forward looking. We have the supply managers purchasing inputs to the manufacturing process in order to create a product. Well, those inputs coming in are higher price, but they haven't slowed down. So that manufacturing process is going to have a huge crude oil demand there. Because you got to remember, folks, it's not just crude oil for a lubricant or gasoline. It creates polypropylene, which is a resin that is used in making like plastics. So that is very important. If we're seeing plastic demand, we're going to see crude oil demand there as well. All right. So keep your eyes on that going forward as well. We got purchasing managers index throughout the day yesterday. We talked about those all coming in above 50, which is showing expansion in the economy. So that is what we're looking for there. One other thing we're seeing here, higher inflation. You know, folks are talking about stagflation, and it does not feel like stagflation to me, folks. It just feels like we are pushing forward, and I don't think it's a stagnant economy right now. As a matter of fact, it feels like it's a very strong economy, but the labor force is very difficult to get to work right now. So let's talk about the overall market, see what's going on there. We've got crude oil. Not surprising at all that it is moving to the upside here, trading at 116 yesterday, or sorry, overnight here, making another new high. It doesn't look like there is anything that is going to slow down crude oil at the moment. We would have to see basically a recession. And at this point, I don't think that that's what is on the docket for us. So crude oil upside risk, definitely. Gold, I still think is an upside risk here. Inflation and gold, those two really are always spoken with one breath. And the fact of the matter is, when we see high inflation, we're going to see things like gold, a limited asset there, drive higher in value, which is why I'm really surprised Bitcoin really hasn't been making those moves. I would still think that the millennials are looking at economic levers and pulleys here and thinking, hey, well, it is an asset that should gain in value around inflationary times. So a little bit behind the 8 ball there with Bitcoin not making that move higher. Now, VIX got a bit of a sell-off yesterday, but seems like it wants to push a little bit. And I think that the reason why, well, when we see equities move higher, we usually see VIX come off as the fear alleviates a little bit here. But this is telling me, folks, that the bottom is not out here, or at least the negative pressure is not waning at all. Folks are buying options, driving the VIX higher. Most likely they're buying puts on this little bit of a bounce. Now, folks, I wouldn't necessarily say buying puts right now is the best strategy. As a matter of fact, that's why I do these webinars on Thursdays to drill down on why we would implement a certain strategy in a given situation. So please check those out. Right now is not the time to be buying puts. All you're doing is helping professional traders like me make money. So I'll show you how you do that today. So please check that out. We'll show why it is the wrong environment for something like that. And again, Dow Jones Industrial Average, yeah, it's moving higher, but we've talked about this. We are going to see the NASDAQ show the weakness first before the broader markets start really selling off with it. That said, I think that we'll see more of pullbacks happen in the NASDAQ than we will in the Dow Jones, because I think it's more of a flight to safety to quality stocks. Also, something to note here, though, with this high volatility, the FANGs really selling off. And I still think that the FANGs have upside here, especially with the pullback that we've seen. Those are opportunities that we can take advantage of. And again, I will drill down on those opportunities in these webinars. So please check those out. Smash the like button before you go. All right. E-mini S&Ps right there at the point of control. We've talked about this. NASDAQ got a little overextended to the point of control, migrating back. Now E-mini S&Ps sitting right there. So we will see some probably volatility around this level here at around 4,400 was what I've been talking about. That's where the point of control is. That's where most people have transacted. So there's no real time constraint. Nobody's really thinking that they need to jump on this number right now and get it in their portfolio because they've seen it so often. So it just becomes a place where we really see volumes start to wane a little bit. As of right now, inside day, it's felt like an inside day almost all week, to be quite honest. Yeah, we have had some moves to the upside, giving people fake rally moves. Then the pullback, it really hasn't gone anywhere, which is why I'm sitting on my hands right now. But there are a lot of opportunities to add some option strategies. And I think that next week is going to be prime for that. We're getting ready to set up for those types of opportunities right now, looking in markets, finding whether or not we can take a credit or have to pay a debit. And I'll show you how you can determine that very quickly in this webinar. So please check it out. Go to Pro Trader Strategies, like, subscribe, and don't forget to comment, because I will circle back around and make sure everybody's clear of concept. All right. So we're going to be taking a look at Apple today. So if you can't take that on a miss, you get another one. Take that. Bye for now.